You know, one of the first mistakes we make as newbie investors is यार 10 रुपए 20 रुपए का share खरीद लो and the market will go up and I'll become a millionaire. I'm sure you've also thought about it. I'll buy a small cap stock. Now, I think we all make this mistake. I also made this mistake. I bought this company called Milk Food. Milk Food was probably a few tens of rupees back then and was hitting the upper circuit again and again and again. And I thought, if this company becomes 100, 200, 300 rupees, I'll make a lot of money. And like everyone else, I tried to buy this company and it went into upper circuit again and again and again, only to go into lower circuit again and again, and I just lost a ton of money. Luckily, I wasn't very rich back then, so I didn't lose a lot. So it doesn't mean that small caps are all bad. It also means that there are a few interesting, smart geniuses or some legends in India which actually understand how to do small cap investing properly. And today, we are going to talk about one framework. He is Dr. Vijay Kedia. So Dr. Vijay Kedia uses this framework called SMILE. We learn about it today. Dr. Vijay Kedia is worth about 700 crore rupees, and these are some companies he's made some massive gains in. Of course, he's had companies where he's not done well either. He also looks for hidden technology, scalable angles in companies. For example, there is Tejas Networks. If you look at this chart right here, an educated guess I have over here is that he would have probably bought around 45 and now he's reducing his stake around 650. But the point is this is a massive 1,300% gain in just 2 to 3 years. How is he able to do this? And there is a reason why most people suck at small cap investing. Hopefully today's framework will clear all of that. Today, we're going to learn how this works.
बस कर दे सारे टाइम फ्रेमवर्क इन्फ्लुएंसर है सीईओ बस कर सब्सक्राइब करवा दे उनसे चैनल बढ़ नहीं रहा हमारा स्क्रिप्ट लिखो बस कर दे काम डाउन
काम करो थोड़ा
सब्सक्राइब
स्टोरी बोर्ड कर रहे हो सुबह से
अबे
Guys, we're teaching you the framework, but hit that subscribe button. Before we understand the SMILE framework, let's understand why it's tough to invest in small caps. There are all legitimate reasons, and I have 3 of them. Let's suppose we have XYZ Pharmaceuticals. Now, let's suppose this company is listed on the stock exchange. It's a small company. Let's assume it's 500 crores in market capitalization. The first problem we'll face is market volatility. Since it's a very small company, even an itsy-bitsy piece of news can affect the stock price drastically. Now, this could go either ways. It could be a 30% up or a 50% down. Because of this, it becomes tough to hold on to these stocks. Imagine even if a rumor goes out, people can react to it negatively. And generally, this is not the case. In a large company, for example, because there are institutions that own a large portion of the stock, foreign and Indian, there will be promoters who own the stock and a little bit of the public. It's very difficult for price to move that much. But in small caps, the price moves a lot. The second reason is growth potential. Now, since the company is small, it may have a niche that it has held on to, and usually that is always the case. So in our case of XYZ Pharmaceutical, maybe it has patents or research in terms of some rare diseases. And if it finds the cure, it could possibly be a breakthrough. It could be billions of dollars in revenue, and this is why investors, whether they're professional or people like you and me who are trying to make money from this, will invest in this company. So that's the second problem over here. You have a huge growth potential, but the risk is also equally high. The third reason is liquidity, and it has to do with something called the shares available to trade or the share free float. So let's imagine there is a company with 100 shares that are available for trading. And let's say you go ahead and buy 20 shares. You are now 20% of that market on the exchange, which makes it very easy for a small number of people or even a few individuals to move the price, to manipulate the price, because utna trading hai hi nahi. The company is so small. This is the reason if you look at this list over here, the stock chart looks like this. you see those horizontal lines? These are upper circuits. And there's also lower circuits, which meant that a few people came, put in orders, and it hit a price beyond which the price cannot go. NSE and BSE put a limit on that. It's called an upper circuit. And the chart looks like this. You're not actually able to buy and sell shares here. This chart looks very pretty. Even I was caught in this year. I thought ki roj upper circuit ja raha hai. If I could just buy, I will be able to make money. But the truth is, you won't be able to sell either. So this is why you see upper circuit, lower circuit. Looks very nice in charts, but liquidity isn't there. You can't actually trade it. I'll make it a lot more simpler. Think of Nifty 50 companies or Nifty itself as this aircraft carrier. It will move slowly but surely. Then a mid-sized ship might be a mid-cap company. And finally, you see that's a speedboat. It'll move the fastest. But if you ask it to do this transatlantic journey and storm aa gaya, wahan pe the speedboat can actually just die. So a good way of thinking of this is 10 speedboats, maybe 9 of them will fail to reach the shore because, they're speedboats, they're small companies. Well, basically they're small companies. But see here, they can move fast, the reward is high, but the risk is equally high. So think of small cap companies like these speedboats trying to make it to the shore, but the risk is really high because storm aa jayega and sab ujad jayega. But I think one easy way for you to actually learn how to create a portfolio is the 3 things that you should do to learn it, right? One, I think you should learn from a mentor who can teach you over 1 or 2 days, live, face-to-face ideally, and tell you where you're going wrong. I feel we also live in a place where lectures don't make sense anymore. If you can build with a mentor, then you can learn with the mentor. 2, I think you should be able to get some feedback. Where was I right? Where was I wrong? Was my analysis correct or not? That's where the real learning happens. And lastly, if you can do this in a community of other people trying to learn investing, then I feel something can happen and you can actually learn how to build a good portfolio. So to make this possible, LearnApp has this program called LearnApp Prime. It's completely free. All you have to do is fill up this application and hopefully get in. The only thing is, only 30% of people actually get in because 70% of people are trying to enter the market for the wrong reason. They want to double their money quickly, they want to trade options, they want all this get-rich-quick schemes, and we do not promote or think it's even possible. But if you think you have the grit to learn a proper way to do this, then you'll get accepted if you say the right things in the application, and over 2 days you will learn it. So if you're interested to do that, fill up that form. Otherwise, you can just stay on YouTube. We put some great content up here as well. Now, before we talk about the framework, let us look at Mr. Kedia's actual portfolio. Here it is. You can see all these companies and the value of each of them. Notice, do you see any company you've heard of? Koi Britannia nahi hai, koi HCL nahi hai, koi Infosys nahi hai. These are small cap companies you've probably not heard of. So, what we have to do is now look at his framework. I have it right here and it says SMILE. Obviously, it's an abbreviation. S is small in size, M is medium in experience, L is large in desire, and E is extra large market potential. I think he's talking about stocks only because it sounds a bit...
समझ रहे हो?
But anyway, let's see. The problem with this framework is it's not a quantitative framework, right? So we at LearnApp thought, let's convert this into numbers because if you don't have an objective way of looking at it, how will it be replicable, right? So Kedia Saab to dekho is very experienced, so he's able to translate this into an actual investment. But people like us won't be able to, right? So let's turn it into a quantitative abbreviation. And S small in size, market cap kar dete hain, less than 5,000 crores. M medium in experience, company should be operating for the last 10 years say, or greater than 10 years. But let's do less than 20. 20 साल के लिए small cap थोड़ी होएगा यार. But I've heard a lot of founders say 10 साल लगते हैं brand बनाने के लिए. So let's keep 10 as minimum experience required. Then what I'll do is, as far as I know, SMILE is spelled with an I. So let's add that I. And I will call it institutional sponsorship. And let's say even 1%, if it's owned by some institution, let's consider it a good thing. Now, when I say institution, it has to be institution. Can't be the promoter with an SPV owning shares or anything. It has to be a legit investment company. L, large in desire. So I think he means the promoter holding should be 60 to 70% and there should be no pledged shares. What does this mean? A large promoter holding is simple. That means the promoter actually cares about the company and doesn't own like 0.5% and says, "Haan, tum log dekh lo yaar." You want skin in the game. You want him to get up every day and you want her to be working towards the vision that they've laid out. Also, you don't want pledged shareholdings. Pledged is when they take their shares, take a loan against it by giving it to the bank or pledging it to the bank. So, promoter holding greater than 60 to 70%, skin in the game. And finally, extra large market potential. Sales and profit growth should be greater than 20 to 25% for the last 5 years. It's very simple. If it's not growing its sales every year for the last 5 years, the market potential may not exist. Now, sometimes a COVID may actually change that. So there is a little bit of non-quantitative approach here as well, but I think this should be good enough. So I think what we should do next is actually run this screener. You can find it in the description. You can pause the video and you can do this with me. So what I'll do is I'll click on the screener and over here we can see all these companies. Exciting, right? Well, you've probably not heard of any of them. They are completely unheard of, but that's the nature of small cap finding gems wala strategy. Now, if you look through this, there is one clear-cut problem. Actually, there are two. First, the SMILE framework is not looking for good management. It doesn't look at vision. It doesn't look at what industry are they trying to break in. It doesn't even look at what sector is growing or are they in that rising sector or not. The bet is simply on this. And I'm sure Mr. Vijay is able to look at the management in a certain way that the Aam Aadmi is not and figure out interesting companies, right? Because he obviously doesn't own all the companies in the screener. So there is the advantage of wisdom on his side because he's been doing this for decades. The second problem is we're not looking at any valuation metrics. What if the P is like 5,000 or 500 or something crazy like that? So I think you should probably add some valuation metrics as well and some analysis of what the company wants to do and the background of the promoters, because in many cases small cap companies ke promoter bhag jate. You don't want that. So put those checks in. And one final thing, since these are small cap, I want you to type right now in the comments, small cap is high risk. This is true. But one thing I had to tell you is this.
Right, sir. You did not use paper for analysis. Thank you.
जा यार अपना काम करो यार. वेले बैठे हैं सब. Good music, intense. One thing I had to tell you is this. If you have 100 rupees to invest, put in only 10 rupees in a small cap portfolio, not a stock portfolio, because the chances of a lot of these companies going to ruin is high. But of course, if you hit the jackpot, it moves up. But now at least you won't guess. At least you have some framework. And if you found this framework interesting, we can discuss many more frameworks. If you like this format of content, please put it in the comments and say something nice. It takes literally a village to make what you see over here. I've been trading for more than a long time now. We have a crew over here which looks after production, editing, there is research, writing, scripting, revision. We block out an entire day to do this. So if you want to encourage our small company, hit that subscribe button and write something thoughtful in comments. Because we're a small company, we read every single comment. So let me know what you think. What is small? You should know how to use it. What is medium? What is large? We don't know. He'll be like, this means बाहर बहुत आवाज हो रहा है.